Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 19th, 2012. Lots to talk about. So let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. So what happened today? Today, I'm not going to go in the history part of every video I make, simply because you can just watch the previous video. If you are a new viewer and you're just watching these videos, then please feel free to look at the previous day's videos. I'm trying to make a video every day, so whatever I'm talking about today, if you don't really understand, you can definitely look back at my previous videos. Okay, so in any case, we created this doji candle, and like in all my other videos, I always say when we get a reversal pattern, so in candle charting, a doji candle indicates a possible reversal simply because there's a indecision in where price should be. Doji in Japanese actually means to meet in one place, and that's basically why price is meeting in one place. So price opens and closes around the same area. A true doji is price opens at a certain price and closes right at that same price. But sometimes this is still a doji. These two are still dojis. These are dojis. These are dojis. Okay. Now after a big move up, when you see a doji candle such as this one, right? Sometimes people would expect a reversal. The way I trade, however, is without the volume verifying the doji candle, then I do not consider that a reversal. A doji candle is a single candle pattern that indicates a possible reversal after an extended move up. Okay, an extended move, in my opinion, is when you're in an overbought situation or oversold. Would be also an extended move. Right now, we are not in an overbought situation on the SPY. Okay, so just keep that in mind. But at the same time, it is a doji candle, so there is a possibility of a reversal. Do you need higher volume to verify or indicate a possible reversal, even though the candle pattern is signaling a reversal? Absolutely not. It is just the way I trade. If I see a reversal candle pattern without volume, then I do not trade that based on just the candle pattern, simply because it's obvious to me that I want the odds in my favor, because I don't want to lose money. I want to make money. If I missed a trade, then I missed a trade. That's just how it goes. But unless the odds are in my favor, I will not take the trade. Let me give you an example. This here is a harami pattern, and I kind of talked about this in yesterday's video, where you have this big candle up and then a red candle, or a candle within the body of the previous candle. This is a double or a dual candle pattern reversal pattern, and it didn't happen on higher volume, so I did not take the trade to the lower side. I don't know if I did or not based on this. I would have to review, but I would not have based on this candle pattern. Maybe because it was in this upper trend line, maybe that would have signaled me to go short. But just based on this candle pattern here without the volume, I would not solidify that as a reversal on the candle pattern alone. Okay, same like here, we created this doji candle on low volume, so I cannot validate that this could be a possible. It could reverse tomorrow. Okay, and I've been saying that in the previous videos, that get ready to short, because the markets look like it's getting tired and it's going to reverse, and I'll get into that later. But based on the candle alone, because I know a lot of people out there, for whatever reason, they see the doji candle and they're like, oh, reversal. Or they see, I know a lot of guys, trust me, they saw this doji candle over here and they said, oh, it's gonna go up, and then they eventually lost a whole bunch of money because it continued down. All right, and it's because these two doji candles wasn't supported by volume. So yes, it can happen where a reversal can take place based on a doji candle with no volume, or a hammer, or a shooting star, or whatever you want to call it, with no volume. The reversal can still take place, but the odds will not be in your favor as much as if you had a volume to back that up. All right, so that's I'm just kind of like standing on my soapbox a little bit there, just because a lot of people tell me that they lost a lot of money, and I really hate to hear people lose a lot of money in the markets. And they, I hear or read on forums that they took a trade based on a candle pattern, and that's the reason why they did it, without any other supporting factors, and it went against them. And then they just say that playing stock market is a gamble. It's like going to Vegas, and they start spreading those rumors around. Yeah, life is a gamble. Everything you do is a gamble. But if you're just putting coins in a slot machine, to me that's a random thing, if you win or not, and that's gambling. But when you're a chartist and you play the stock market using technical analysis, you're putting the odds in your favor. you're basically reading the general population of traders human emotion, because emotion patterns always work. Well, they don't always work. Not a lot of times patterns do work simply because human emotion never changes. You have fear, you have hope, and you have greed. I mean, those are your three base emotions, and when you can see that, and that's why we have the VIX to look at, because that indicates fear. You can see how fast things can move, and what direction things could possibly go. Okay, so it's not, that's, I always say in all my videos, nothing's 100% guarantee. It could, just because it says it's going to reverse doesn't mean it will. Okay, so I'm just going to stop talking about that right now. So yeah, so we have this doji candle. It's not on high volume, but at the same time I am a little bit on the bearish side, because the higher we go, the bigger the smile on my face becomes, because the higher we go, the bigger the short will be. Okay, that's just my opinion. I mean, if we get into this upper trend line here and I take the short, then I'm just gonna have a huge smile on my face, versus if I take a short here. And this is why, okay, this is why, let me explain to you again, this is why I do not short in a low volume market. Right now, if the volume is low, it gives the institutions a chance to prop the markets higher. Everybody knows that the markets are manipulated. It's not something that you should blame, because it's been doing the Feds have been manipulating the markets for years, since the markets even open. Okay, so it's nothing new. It's just a lot more obvious now, because our economy is hurting, right? When everything's fine and dandy, nobody cares. But now that our economy is hurting, people are losing money in the stock market. People are losing money in their 401ks or whatever the case may be. Now they blame the government for manipulation in the stock markets. But it's always been there. So it's just something that you have to be able to be prepared for, and that's why I don't go full, I don't put a lot of money in any one trade, simply because if it does go against me due to manipulation, not a big deal, right? In any case, right now, this whole move up here, in my opinion, is definitely manipulation. And I'll show you some intraday charts to prove today what it kind of looked like. In addition to that, this week is options expiration. Therefore, you're going to have a lot of volatility. Even though the volume is low, I mean, the volume's been low for a long time. But if you look at the intraday charts, I mean, the volatility this week was just unbelievable. So for day traders, there's a lot of money to be made, okay? So this candle closed right at, let's see, it closed at 137.73. All right. Look at this level here. What is this level? I never touched this from previous videos. From the previous videos, this is 137.74. I was 1 cent off on the close, which is this mathematically calculated level. Now, will this calculated level hold into tomorrow? That is the biggest question. And will this doji candle still play out without substantial volume backing up the exhaustion here? Okay. Will we, I mean, these are all questions. Will we actually get up into this trend line here? I'm going to tell you something right now. If we go higher tomorrow, and this is a big if, and this is why I've been staying out of shorting the markets, and it's because the volume's just been low. I said in the previous video, if the volume was low again, we'll probably have an update, and that's sure enough what we had. It was only up 36 cents for the SPY, which has an average of, a buck half. It's not bad, 36 cents, and it is a doji candle, so it does show that it is kind of getting tired, okay? If we get one more push higher, I don't care if we hit this trend line or not, I'm probably going to start accumulating shorts on the SPY. The reason why I'm not doing it early on the SPY is because I already have my Seagate short and I still have my Walmart short, okay? Now here's the thing. If we turn over tomorrow, not a big deal, because I should be reaping the profits on my Walmart and my Seagate short. But if we continue higher tomorrow, then I'll probably start taking some small entries for shorts. And that's only because by the time we get to this upper trend line here, I do expect at that time, unless Uncle Ben comes out with a QE3 announcement, for the markets to turn over, and hopefully it's the last pivot top we get before we break down from this bottom trend line here, okay? Hopefully. So that's kind of what I'm looking at now, because we are into this calculated level, which is amazing to me how these calculated levels are working, but they are working pretty well lately. If this calculated level of 137.74 does hold up, then we should see a pullback tomorrow. I'm thinking that even though this doji candle is not supported by volume, let me show you something. And this is something that everybody needs to realize when you do a technical analysis, especially with trend lines and pivot tops and whatever, however you draw your lines. Everybody has their own opinion on how to draw trend lines, okay? I mean, I'll tell you something right now. A lot of people, they don't draw trend lines like I do. I'm not saying my way of drawing trend lines is any better. All I'm saying is that people have different ways of drawing their trend lines, which will give you different indications. Let me show you. I do believe that you are not supposed to cut through the body, okay? Some people say you're not supposed to cut through tails either, but cutting through tails, in my opinion, is okay, okay? So let me just bring this down here, and as if you can see, from this pivot top here, all right, this pivot top here, on the tail, not piercing through the body, just piercing through the tail again. This is piercing through the body, but this one is definitely okay because this could be considered definitely as a possible breakout, but you had no confirmation. You see how that works? We talk about confirmation in my previous videos. Anytime you have a breakout, you need to confirm with another candle the next day with a close above the high of the previous candle. The next day we didn't get that. So this upper trend line is still intact. We come back down. Now we come back up and look where today's candle is at now. You see, this is being less conservative. I like to be a little bit more conservative in my trend line. So there's a possibility people have this trend line in place right now. And if this trend line does work, then we should see or start seeing the pullback as early as tomorrow. And tomorrow is Friday, but it will be a low volume day. Well, normally it's a low volume day, but it really depends if, you know, we had such a big move and it's a Friday. Everybody's going to be afraid of what happens over the weekend. They may not want to hold. So a lot of people may want to start taking profits. So that's also a possibility. And that's why we may actually get somewhat of a little bit of a pullback. But if we do go higher tomorrow, then that shows me that there's still a lot of confidence in the markets. The bulls are still confident that over the weekend there's not going to be any bad news in Europe or anything that's going to come out. Again, I'm a little bit more conservative, so I'm going to use this as also a top, this as a top, and therefore we are not in this upper trend line just yet. But I'm telling you now, 138.50 around there, or maybe next day would be around 139. In fact, we get close to this upper trend line, I'm going to start accumulating shorts. So yeah, so going back to the questions, will this 137.74 hold? Will this doji candle play out even though it's a low volume candle? And or will we get up into this upper trend line here tomorrow? Okay, so tomorrow is Friday. It's going to be kind of like a wild card day simply because, you know, you're normally you don't get too much action on a Friday because, you know, the volume is normally low. I'm not even thinking about this 141.36 level yet. We break out of this upper trend line here and we confirm, okay, just like how I talked about on this one here, then this 141.36 level would be definitely something I'm going to keep my eye on. And again, like I said in the previous video, if you go straight into this level, that's a dead short to me, and I'm still not going to go all in on the shorts, but I would definitely probably go a little bit more than I would normally go, simply because then at that point the markets would definitely be over in an overbought area, at least the SPY will. Okay. Alright, so here's a question. A lot of times when I'm not sure what the markets might do, I look at the UUP, which is the dollar, because the dollar is inverse to the markets, and sometimes it can give you a hint on what the markets might want to do. Well, look at this. We just talked about this in last night's video. The $22.80 level. The candle closed today at $22.78. That's 2 cents off. 2 pennies off this mathematically calculated level. Is that unbelievable? We actually tagged the 20 moving average, and then we closed right above this 22.8 level. Now, if we get a breakdown of this 22.80 level, we're going to have some support at this upper trend line here and this 50 moving average, in which case then I think we should definitely get a bounce. We could actually get a bounce because this is a mathematically calculated level here, and we normally do see bounces off these levels that are calculated. We also have this gap fill here. If we do get a bounce tomorrow, then I think the dollar will start going higher at that point. Okay. Now here's a discrepancy between the dollar charts. This is the chart of the dollar futures. It's just US dollar, and then we've discussed this in previous videos as well. As you can see, this one went right into and pierced the this support line here, went right into the 20 moving average and then recovered. This here is after hours, so basically the E-mini futures are down just a little bit. Will this hold is the question, and will we get a bounce off the futures on the dollar? That is the next question, right? And then we also have we're also going to have support down there. So with that being said, it really depends. We have to watch the markets very closely. If this 20 moving average holds up, okay, then we should see start seeing some downside in the markets. Okay, if it doesn't hold up, we'll bleed into this level here, and I'm pretty sure, I give this a higher percentage ratio that the 50 moving average would definitely hold up, because we also have this upper trend line here giving it even more support. And let me see if I can find anything else around here. We do have um, area of consolidation where I like that area as well, but I normally don't make a trade based on that alone. Let me see here if there's anything else I can take a look at. Let me just draw in maybe a Fibonacci retracement level to see if that has any holding any water. Yeah, so there you go. So this 25% Fibonacci retracement. Whoops. Let me just delete that drawing. So this area right here will have a lot of support, a lot of support. So if the dollar can get all the way into this area, I'm pretty sure that we should get a bounce in the dollar unless there's some major news that comes out. Okay, so there could possibly be some more upside in the markets, and that upper trend line is definitely a possibility. But this is something we're gonna have to watch out for. I do think we are close. I've been saying that in the previous videos. I still think that this up move is not real. It's fake. The volume is just non-existent. It's institutional game playing. To me, I would get ready to short. And as we all know, as traders, the markets can go up, and it can go up and up and up, but all it takes is one day to wipe out days of going up. You know what I mean? It's like climbing up the mountain. If you slip and you fall, or you get scared and you panic and you start falling down the mountain, it took you hours to climb up the mountain, but it only take you a second to fall off. Okay, let me give you an example here. Actually, before I give you that example, let me show you something else. Here's a chart of JP Morgan. I still haven't had time to do analysis on JP Morgan yet, but the bottom line is, let me just delete all these drawings. JP Morgan, even though we were up in the markets today, okay, even though it wasn't that high, was still down 50 cents. JP Morgan is the leader in the financial sector of the market, okay? Some may actually argue with me and say, actually, not JPM, it's Goldman Sachs is the leader of the financial markets. Well, Goldman Sachs was also down $1.51, even though the markets were positive. Let's look at something else. Look at Bank of America, part of the financial institutional index of the finance sector, and Bank of America was also down. Okay. All these things, I mean, if the finance sectors cannot catch a bid and the markets are going higher, that's just telling me that's just definitely screaming to me that the markets want to turn over. I don't know how soon. I'm thinking, worst case, in my opinion, Wednesday. Maybe Tuesday, worst case, simply because Friday, Monday is low volume. Maybe when we hit Tuesday, Wednesday around that area, that's when the markets should get a lot weaker and start coming down. If we don't come down sooner, I mean, we could come down sooner than that, for all I know, right? This is the chart of the VIX. All right, so we got the bounce off the 1577 level, right? So that's not a problem. That expectation was there in the previous video because of this bottom moving trend line here. I said there's a possibility we could hit this trend line here, and it looks like that we might actually do that. Let's see if I have any pivots here, any pivots here, any pivots. Well, we might actually even go lower on the VIX, but we'll see. We'll see if this trend line holds up. Right now, again, the VIX is the fear index. Okay, it's a fear indicator, some say. And out of the three emotions, greed, hope, and fear, fear is the most strongest one. So when there's fear being put back in the markets, the VIX will pop. Okay, and you'll have first resistance here at the 20 moving average for the VIX. But the VIX is very, very oversold, and or the VXX, I should say, and well, VXX is actually the volatility index. But anyways, long story short, there's no fear in the markets, so why should the markets pull back drastically? That's the whole point. All right, I kind of wanted to show you this chart. This chart is a chart of Walmart. Okay, so I've been preaching about Walmart for a long time, but I guess I stopped talking about it after a while because it was just doing the same thing over and over again. So Walmart went up into this a higher upper trend line here, and you can pull up the I think I labeled the videos that I make, and if you just look for the videos with WMT on there, you'll see how I've been trading Walmart. Walmart today, interestingly enough, and you can see these two green lines here, I never touched. Okay, this was here like from when I started looking at Walmart. Okay, we pierced through that and we closed right above this trend line here. Amazing. These trend lines are coming from this pivot point here on the gap on the top and the bottom. Okay, and it's held significant, very, very well. We went right on the upper trend line here. We got a bounce off. We pierced it, went all the way down, broke through the $70.56 level, broke through the 20 moving average, and then obviously we had a recovery. Institutions jumped in, propped Walmart back up, right above the bottom trend line, which is interesting to me, and that's why I love technical analysis. Now, I do see Walmart in relative weakness at this point in time. We may start consolidating sideways before another move down. We may actually consolidate right above the 20 moving average, and then so we gotta gain some power to push through that 20 moving average. Okay. Now, if the markets start going down though, meaning if the markets start bleeding off, I don't think Walmart will consolidate. I think it's just gonna bleed off with the markets. Walmart is kind of like the head start here. Walmart, the beast, right? The strongest, even stronger than Apple, had a huge down day today. That tells me there's something going on. There's gonna be some weakness in the market, and these are the signals that I look at that tell me that the market has a potential of turning over very shortly. The question is when, right? That's always the question, when. In any case, this is the chart of Walmart. And this is the chart of Seagate Technologies, code STX. We broke out of this upper trend line. We did not confirm. We came close to this 2846 level. A lot of times this happens. We come close to the level before it turns over. It may not even be turning over yet. We may actually get a spike. I mean, if the markets go higher tomorrow, we may into that upper trend line, we may get a spike into this 2846. We didn't confirm above this candle here. So the confirmation resets, meaning you have to break out again and then confirm on top of that again before confirmation is in play. But I still think the overall picture here is Seagate is bearish. Okay, we do have earnings coming up on Seagate shortly, and I do not like playing earnings. I want to get out of my position before earnings happens, because you just don't know what's going to happen in earnings. But I'll just see and play it as I see it as the day gets closer. Here's something I want to show you. Manipulation. Crazy manipulation. Low volume, but still manipulation. This is a 10-minute chart of Alcoa. Okay, the code is AA. Take a look at this. This move is just sporadic. See that? This is a Dow Jones company. Okay, let's look at American Express. Maybe not so much. American Express was pretty okay. Let me see another one. Here, this is an interesting one. McDonald's is actually part of the Dow Jones, and this was the start of the day, this was the end of the day. Look at that. Is that crazy? I mean, look at that volatility throughout the whole day. That is just unbelievable. Look at the previous days. It's nothing like today. You see that? Look at Coca-Cola. Look at this. We had a big down. This day we had a big down and then big up, but it's steady, right? And then yesterday was pretty flat. And look at today, up, down, up, down, up, down, up, down, up, down, up. I mean, it's ridiculous. Okay, that's how much manipulation we have. And again, it is options expiration. So until tomorrow, or the end of the day tomorrow, I would say maybe after half a day tomorrow, then the manipulation should slow down, and we'll see if we get a sell-off or not. This is a chart of Freeport-McMoRan. The code is FCX. And I'm really keeping my eye on this one. They just had earnings. They had a small pop-up today. The earnings was before market. If we can break out of this upper trend line here, I'd be very happy. It has a long ways to go though. Okay, so I'm going to time the FCX with the market. So if the markets hit the top of their upper trend line and it doesn't break through, and it looks like a nice reversal, some candle with nice volume, as an opinion. Oh, okay, you know what, I'm gonna make this video just a little bit longer and give you some examples of what I'm talking about volume. Okay, this is a 10-minute chart of the SPY. What do you notice about the volume down here? Let me just make it a little bit bigger, but not too big. What do you notice? You notice we have this blue line, which is the average. Okay, then you see the ones that stand out, like the ones in the beginning of the market open and the one at the end of when the market closes. Don't pay attention to that. Pay attention to the ones that stand out. Here's one that stands out. You line this up. What candle is this? This is a hammer candle. After a down move, right, we have a hammer candle on high volume, right? In addition to that, we also have this double bottom. In addition to that, we're on this 137.26 level. So why wouldn't you take a long trade on that, right? Simple. Take a long trade, make some money, Everybody's smiling, everybody's happy. That's what volume does to confirm, in my opinion. Okay, let's look at this one. What volume stands out? This volume stands out. What candle is under it? Not really a candle pattern, but we are into support. You have this pink line over here, as we discussed in the previous video. We had high volume, that means exhaustion. Boom, we come up, and then we come higher. You see that? Volume to me is very, very important in any trade that you make to confirm. I would not base everything on volume, however. There's couple ways I look at volume when there's a breakout. If the breakout happens on volume, so if you have consolidation and then you break out on volume, then that tells me that you have more to go. But if the breakout is based on low volume, then that tells me it's a head fake. Okay. Also, in reversal patterns, you need higher volume than the average to confirm the reversal. But of course, you wouldn't just use volume and a candle pattern to confirm a reversal. You'll also need other factors like support and resistance lines, trend lines, and or Fibonacci retracement levels. Okay. All you have to do is back test, look through your charts, find charts that are that have candle pattern reversals. Look for the ones with you're gonna find a lot that didn't need a volume confirmation, but then you're also gonna see it fail. And the ones with volume confirmation, you're not gonna find as much, but you'll find that it still does fail. It just doesn't fail as much. Okay, that's the whole point that I'm trying to make. Nothing's guaranteed, obviously, but that's just what I do to confirm moves. Is look at the volume. Again, going back to the eBay thing, if you see a guy selling, if you see two guys selling one watch, you don't know if the price is worth what they're selling the watch for. You only got two guys selling the watch, so they could be competitors with each other. You really don't know if the watch is validated, if it's really $100. But if you see 500 people selling the same watch for $500, then you can pretty much guess that the going rate for that watch is $500, and that's the same as the stock market. Okay, so without the volume, I can't confirm the move, I can't confirm the price. Therefore, I wouldn't trade based off of that, and I would think it's a trap. And normally, it works out. Anyways, I'm way over my time. Really sorry for ranting, but you know what? Again, I really appreciate you guys coming by to watch my videos. Thank you very much, and God bless to you all.